Hello and welcome to the Weekend Investing Daily Bite of 23rd October. We are currently witnessing a correction in the markets, and the markets opened down from yesterday, had a sharp bounce very first hour in the markets, and then towards the end gave up some of the gains of the day. So overall, nothing special in terms of direction of the market remains down. Some bounce is there, some sectors have propped up today, but largely the correction is in play and it will probably continue. So we'll talk about the weakest stocks of calendar year 2024 in today's Daily Bite. We'll look at different segments of the market and where the cracks have opened up. Please read the disclaimer, it is in your interest. Uh, in terms of, and do subscribe to the channel as well. In terms of where the market is headed, you can see here there was an attempt to recover from yesterday's drubbing. We went halfway through the yesterday's candle, but in the end, dropping down back to nearly where we opened. Overall, down 0.15%. So net no loss for the day, but a bounce has been done, and maybe now we resume the downtrend from the next session. That is now you know likely to be in play. So the nearest sort of support points are this pivot near 24,000, and as we had been mentioning, this head and shoulders pattern has a target of somewhere near 23,400, somewhere near this high of the election day candle. There is no guarantee whether we reach there or whether we will go further down or not. The 200 DMA is also somewhere near 23,300, 23,400. This is the 40-day moving average. So a confluence of support points near this 23,300, 400, the 200 DMA and the HNS target seems like a good target, in terms of conditioning your mind that, maybe we are going there. So let's not get shocked if we get there. We will think about further downsides once we get to that point. Nifty next 50, again, similar pattern, opened down, went up a little bit, but collapsed again, not able to survive. Nifty next 50 is already at the election day high. So Nifty next 50 has already declared 4 months of no gains. Nifty is slightly better than Nifty Junior. And because Nifty Junior has done phenomenally well versus Nifty, it may fall a bit more than Nifty, of course, when as this downtrend continues. But we have come almost 8,000 points on Nifty Junior, which is not less. So there may be some bounce again. Let's see where we go on this. The mid cap part of the market saw some bounce. We actually gained 0.5%, which is nothing much, but uh, we are somewhat in this congestion zone of support here. So a good bounce from that support point. One will take 0.5% any day right now. And the similar case in small caps, where almost 1% was gained. We had almost reached 1.5% or more, but then some give up happened towards the end. Here also, this particular range where the support is there played out quite well. No doubt that the entire market, all segments are in a downtrend, and these are only small bounces. It will need to revisit the whole structure of the uptrend again at some point, and then start to go up from some base that it forms. Right now, it doesn't seem like we can immediately fire and make a V-shape kind of recovery. That kind of a feel is not there in the market. Nifty Bank also similar stuff, opened lower, went 1% or so high and collapsed back. Net no gain, no loss on this as well. Uh, Momentum trends, market was reasonably even, slightly towards advances, but when you have a bounce, a dead cat bounce kind of a situation, you will have this, but then that is not so meaningful. You can see most of the stocks were within the plus 5% or minus 5% range. Very few were sort of the outliers here, which will always be the case also. 282 advances to 217 declines. FIIs continue the sell process, 4,000 crores, and DIIs continue the buy, 5,800. So DIIs have pressed on the pedal more on 22nd October, when the most of the fall was coming. So it looks like there is good support coming from domestic money, but sentimentally the market is playing along with the FII flow. Heat map was mixed today. You had Bajaj Finance HDFC Bank, IT stocks, Coal India, Bajaj Auto, all these bounce. And you also did State Bank of India, ICICI Bank, Axis Bank, Mahindra, NTPC, Sun Pharma, L&T. All these stocks were down. Reliance was down 0.36% as well. In the Nifty Next 50 space, the capital goods, Siemens, ABB kind of stocks were hammered, -5%. DMart, Naukri, Zomato. Zomato incidentally has increased its commission charges, so that stock was going up today, 3%. Varun Beverages on back of good results is up 5.75%. JSW Energy up 2.5% along with Motherson. And you had some relief rallies in PSU banks, which had gotten thrashed a day earlier. So mixed bag on the Nifty Next 50 front as well. Sectoral trend, only IT stocks stood out. So 2.4% on IT stocks. PSU banks, as I mentioned, just a bounce there. FMCG stocks also just a bounce at 0.2%. Rest everything was in the red. Pharma surprisingly got thrashed today, -1.6% down. Public sector enterprise continue to reel down. So real estate and public sector enterprise stocks are the biggest losers in the last 1 week, along with autos, you can say. And over the last 1 month, real estate, FMCG, and autos are the biggest losers. Uh, the space where we were more confident in terms of the rally that came through, we are looking at private banking space. That also was down 0.3%, but overall in the last 3 months, it has not gone much anywhere. And for the 12 months, it is still the laggard for the entire market. Within IT stocks, the second rung IT stocks were doing quite well. Some of these stocks, Persistent, Coforge, Emphasis, these were rallying very, very hard. The entire IT universe was up 2.3%. In the stock spotlight, you had Deepak Fertilizers race up 16% today. So this uh, has been sort of ranged since beginning of September within this range of 950 to 1120. It looks like it wants to go up, and whenever stocks are strong in a week or a bouncy session and making new all-time highs or near all-time highs, I think one should sit up and take note of that. It has been a phenomenal journey for Deepak Fertilizer. From recent last 4 or 5 years, it has gone from 50 rupees to 1100 rupees. So that's an amazing sort of a run on this stock. So the weakest stocks of 2024 is the topic of the day. Let's look at how have, and we are looking at calendar year only right now. So about 10 months are about to complete in this year. And what has been the performance of large, mid, and small caps in 2024? So large caps denominated by CNX 100 index are up 15% so far, and mid caps are up 22.9%, and small caps are up 24%. So uh, all this is sort of very nominal. There's nothing exceptional about it. And you can say that even though small caps had reached 32% and mid caps had reached 30% and large caps had reached 24%, right now the gains are nothing exceptional. So in your mind, if you think that in the last 10 months or 1 year there's been fantastic gains, these are nothing exceptional in my view. So battered stocks of 2024, let's see the weakest stocks from these three segments. So within the large cap space, from 1st January till now, we've had Adani Gas top loser, 30%, IndusInd Bank, Shree Cement, Nestle. These were the only four stocks which have a double-digit loss for the calendar year. They may have lost more from the top, some of them, but from a calendar year perspective, I mean, these are the only four double-digit losers. Otherwise, there is not so much loss here at all. Just about 10 or 12 stocks that have really lost. So no losses have really happened. So we have to also see the context that a lot of folks who are crying hoarse about the correction, that if you see just a 10-month period also, there are only four stocks that really have gone double-digit loss in large cap space. And you can see that Adani Total Gas, IndusInd, Shree, and Nestle have consistently declined versus the large cap index. Within the mid-cap space, you have Bandhan Bank, which is down 27%, Tata Elxsi, Adani Wilmar, Tata Tech, Bank of India, UPL. Again, just five stocks are down 11% or so from the point of the start of the year. There are more losers when we look at from the highest point, but not too many for the calendar year basis. Again, you can see that the consistency of downtrend versus the index has been there for these stocks. So once you see that, you know, from the very beginning of the calendar year, some of these stocks have been underperforming. Most of the strategies, at least the momentum strategies, will not even come close to these stocks. So you would see that none of these stocks ever entered into our portfolios. And within the small cap space, you have Z Entertainment down 56%, RBL Bank down 41%, Maharashtra Seamless, Equitas Small, India Bull Housing, Ujjivan, SFB, Sun Pharma, Advanced Research, IFL Finance, Gujarat Ambuja, ITI. Many stocks are down 20, 30, 40, 50% also. A lot of stocks above 20%, a lot of stocks within 10 to 20%. So within the small cap space, there is significant cut from the 1st January also. And that, of course, is a space where some pain is there for sure going forward. Here you can see that several of these stocks dropped early during the year and stayed low, and others were consistently going down. Many of these stocks, again, were not picked by any of these strategies. So, you were saved from this continuous agony. There may have been stocks that went up and are now coming down, and we may have lost profits on some of them. But that's sort of the part of the game that are playing. So the importance of exit plan is you can say that I can keep repeating this, and it is still not enough, because most of the people will not have a plan to start with. That why did they buy the stock and when will they sell the stock? These two questions you should, I mean, we look at four actually, when to buy, how much to buy, what to buy, and when to sell. But even if you have these two sorted out, that why have you bought a stock and on what condition are you going to sell? This, if you can clarify in your mind that I bought this stock because of XYZ reasons, and as long as those XYZ reasons are true, I'll hold on to the stock regardless of price. If you are not a price-based investor, or if you are basing your decisions on price, then what are those conditions of price that you will, hold those stocks still? But if you don't have a plan and you heard the stock in a party, I'm sorry, your portfolio is doomed, because there is no way you will make money in the markets in the long term if that is the strategy. So get out of this tips business, get out of trying to, uh, get somebody else's thesis here and applying it yourself without knowing whether that person is still there, or maybe a lot of folks also do mirroring of large investors. Those things, in my view, are very difficult, because you don't know the psychology of that person, how he has invested in that stock gradually, at what prices. Now, stock may have gone up, you are investing now. What is that person doing to his position? He was sitting in profit. Maybe he's gradually selling off as it comes down. You will never come to know. So following somebody blindly or getting recommendations from here or there is not going to help in the long term. I think I've been in this business completing almost 30 years now, and I've not seen anybody who does not have a plan make money. So investing or trading, whatever it is, you need to have a business-like approach to it, and no business survives without a plan. So if you start a business and you don't have a plan, it is going to shut down. The same will happen to any portfolio which goes on without your plan. So do have a plan in mind, whatever it may be. I'm not saying everybody has to do momentum investing, because everybody, if they start doing momentum investing, we will have no edge left. So I don't want all of you to do momentum investing. Please continue with whatever you're doing so that we can make that extra alpha when the market is in our favor. But do write in the comments what is your view on an exit plan. How do you do that? And I'll be happy to read it and comment on it in the YouTube comment section. Thank you so much for watching, and I'll see you in the next one. Bye.